The relationship between gold and the US dollar is a crucial factor for gold investors to understand. Generally, they move in opposite directions. A strong dollar often pressures gold, while a weaker dollar tends to support it. As we begin 2026, let's explore this dynamic and how it might influence gold prices in the year ahead. Let's unpack the factors that drive this tug-of-war and what to watch for in 2026. Gold is primarily priced in US dollars on global markets. A stronger dollar makes gold more expensive for investors holding other currencies, potentially dampening demand. Conversely, a weaker dollar makes gold cheaper for foreign investors, boosting demand. Imagine a European investor. If the dollar weakens, they need fewer euros to buy the same amount of gold priced in dollars. Both gold and the US dollar are often seen as safe haven assets. During times of economic uncertainty or geopolitical turmoil, investors may flock to either gold or the dollar depending on the specific circumstances. Generally, if the crisis originates outside the US, investors might prefer the relative safety of the dollar. If the crisis originates within the US, gold could be the preferred safe haven. Interest rate differentials between the US and other countries can impact both the dollar and gold. Higher US interest rates tend to attract foreign capital, strengthening the dollar. This can then put downward pressure on gold prices. Both gold and the dollar are sensitive to inflation expectations and monetary policy decisions. A strong dollar can help to tame inflation by making imports cheaper, while gold is often seen as a hedge against inflation. Central bank actions regarding interest rates and quantitative easing can significantly influence both the dollar and gold. Factors that strengthen the dollar and typically weaken gold. Strong U.S. economic growth. Robust U.S. economic growth typically boosts the dollar, as it attracts foreign investment and increases demand for the currency. Rising U.S. interest rates. Higher U.S. interest rates make the dollar more attractive to foreign investors. Safe haven demand for the dollar. During times of global crisis, the dollar is often seen as a safe haven, leading to increased demand and a stronger dollar. Relatively tighter U.S. monetary policy. If the Federal Reserve is pursuing a tighter monetary policy, raising rates, reducing its balance sheet, relative to other central banks, this can strengthen the dollar. Factors that weaken the dollar and typically strengthen gold. Weak U.S. economic growth or recession. A slowing U.S. economy can weaken the dollar as it reduces foreign investment and increases concerns about the country's financial health. Falling U.S. interest rates. Lower U.S. interest rates make the dollar less attractive to foreign investors. If inflation is high within the U.S., investors might seek refuge in gold as a hedge, weakening the dollar's appeal. Expansionary U.S. monetary policy. If the Federal Reserve is pursuing an expansionary monetary policy, lowering rates, increasing its balance sheet, this can weaken the dollar. Originating in the U.S., situations creating distrust in the U.S. government and its financial assets will drive capital to gold. Pay close attention to U.S. GDP growth, employment figures, and inflation data. Strong economic data will likely support the dollar, while weak data could weaken it. Federal Reserve policy. Monitor the Federal Reserve's interest rate decisions and statements regarding its monetary policy outlook. Geopolitical developments. Geopolitical tensions can influence both the dollar and gold. Other central bank policies. Compare U.S. monetary policy with that of other major central banks, such as the European Central Bank and the Bank of Japan. Dollar Index, DXY, track the performance of the Dollar Index, DXY, which measures the dollar's strength against a basket of other major currencies. Sophisticated investors constantly monitor the relationship between gold and the dollar to make informed investment decisions. They use various tools and techniques to analyze this relationship, including technical analysis, fundamental analysis, and economic modeling. They may adjust their gold allocation based on their views of the dollar's future performance. Stay informed and profitable. Subscribe to our YouTube channel. Want to master the intricate relationship between gold and the US dollar and use this knowledge to your advantage? For daily video analysis of key economic indicators, Federal Reserve policy decisions, and their impact on both gold and the dollar, We provide actionable insights to help you navigate the precious metals market with confidence.